What's good, family? And today I have an amazing video prepared for you. This is our 3-step strategy that will make you extremely profitable. This strategy works on all pairs and on all markets. I backtested this strategy hundreds of times and I've taken multiple trades using this exact same strategy. So make sure you give your full undivided attention and are taking notes, and go on your charts and backtest this strategy and see it for yourself. I'm Wendell from Spektrades, and without further ado, let's get straight into this video. Let's get into our fair value gaps plus our liquidity sweep breakdown. A fair value gap is an imbalance in price where no orders were met. It's found between a large impulse candle and the gaps it leaves. Smart money uses these as re-entry points after a displacement happens. You can see price gave us this candlestick and then give us this huge expansion candlestick and then give us a third candlestick, but it left a gap. Like, why didn't these two candlesticks connect together? This is our fair value gap. Price usually come back, mitigate this to then expand higher. Let's get into the real power. Liquidity first, then our imbalance. A strong fair value gap setup forms after liquidity is taken. That means our inducement. Price must sweep a high or low, that's our liquidity trap, before creating the fair value gap. The high or low may be a prior day's high or a prior day's low, or a prior session high or a prior session low. This confirms that smart money just cleared out weak hands. Now that's when they enter. For an ideal scenario, let's say the market is trending. Liquidity is resting above/under key levels, equal highs or equal lows. This may be a liquidity level. Price then sweeps that liquidity, then leaves an imbalance or a fair value gap behind. You enter on the return to the fair value gap. Price left this bullish fair value gap to then extend higher, then pulled back, but left this inducement liquidity low. As you can see, all we're looking for is for price to purge lower, clear that inducement liquidity low, mitigate the fair value gap, to then come back higher to clear this old high. This is our continuation model where the reversal already happened, right? Price already gave us the main reversal. We're just looking for price to pull back lower to clear internal range liquidity and then quickly expand higher and clear external range liquidity, which will be the prior highs. So we're clearing internal range lows, mitigate the fair value gap to then expand higher external range liquidity highs, these buy side liquidity highs. Let's get into the exact blueprint that we use. Our fair value gap plus our liquidity sweep strategy. First is our top down bias check. Start with the 1 hour or the 4 hour. That's where we get our market structure and our point of interest. Everything I'm telling you guys to do right here is everything that we do on a daily basis, especially in Spark Trading University. Like, everything that we do right here is exactly what we teach. You have to do a top-down analysis. One of the key mistakes that I see people do is that they don't start from the higher time frames. They scale down to the lower time frames way too fast to catch that model, and they miss the whole higher time frame trend. So look for the trend on direction on the higher time frames. Are we bullish or are we bearish? That's why I have this right here, right? And I truly emphasize this. Then we identify clean zones of resting liquidity, equal highs or our equal lows. Like, where, like, you have to identify all these things on the higher time frames. So you either can start on the daily, right, or the 4 hour or the 1 hour, which, like, however your trading style is, right? If you're a swing trader, I'll start on the monthly weekly, right? The higher the time frame, the more powerful it is, right? That's kind of like the notion. The lower the time frames, the more volatile and the more room for error that you have, right? Me personally, I sometimes go on the 15 seconds, right? But if I'm on the 15 seconds, everything has to align from the 1 hour, the 15 minutes, the 5 minutes, the 3 minutes, the 1 minute. It's like everything has to be in one order for me to take that 15-second trade. Because if it's not, then I'm gonna be out of alignment, right? So that's the first thing, is our top down bias check. Let's go for the second thing on lower time frames, the 15 minutes and the 5 minutes. This is where we wait for the sweep of liquidity, where price usually takes the prior highs or the prior lows. If you're one of my students in Spark Trading University, you know how important it is for me for that 15-minute liquidity sweep. it's truly important. Whenever I'm trading live, that 15-minute liquidity sweep is one of those things that I will patiently wait and sit there and wait and see if price give me that 15-minute liquidity sweep. It's probably like one of the most powerful things I'll say in trading is waiting for that 15-minute liquidity sweep. And then after that, I'm looking for an immediate displacement candle that creates the fair value gap, right? And then a breakup structure or a change of character that confirms the intent for that move. I'm gonna give you guys examples on all of this right here. Let's get into our entry rules. Enter on return to the fair value gap. We can refine it on the 1 minute to the 3 minutes. We add confluences if the fair value gap is within a certain OTE zone, or a certain higher time frame order block, or if it aligns with the New York session time between 8:30 to 10:30. It's really between 8:30. I'll say between if you let the news pass, right? So me personally, I start trading Nasdaq around like 9. So for me, I trade from 9 to around 2 p.m. That's like the whole session for me. I just after that, I usually get tired and I just walk away. For the risk, we always place our stop loss below or above the prior sweep low or high. And for our target is we're targeting the next internal or external point of liquidity level. Let's get into this schematic right here, right? So I can just explain this right here. We see that price left this prior high, building this consolidation range. This high gave us this old low right here, but price never broke this old range. Then we see price expand higher, but gave us a liquidity sweep of this old high right here, right? This is the model that's playing inside of a higher time frame zone, but this is exactly what we're looking for. Right here is a gold 1 minute scalp IC 2022 model. This is probably like one of the most powerful models, right, that a lot of people know about. After this liquidity sweep, we're looking for that fast displacement. This is confirmed. This right here confirms this fair value gap. Price purged lower and give us this breakup structure. This fair value gap is also aligned with this inversion fair value gap, right? This bullish fair value gap was supposed to hold to continue, but price purged through it. Then price pulled back, clear this inducement high, mitigated entry at the 50%, stop loss at the candlestick wick, targeting prior internal range lows right here. This right here is just the basic blueprint, right? Make sure you are taking notes. Make sure you're like looking at this, because if you understand this right here, this is probably like the easiest way I can break down the fair value gap plus liquidity sweep model. Like this is probably like the easiest model, right? Like that works all the time, I would say, right? Not, I would say 100% of the time, but a lot of the time, right? If you want to just pick one model, one thing to look for, fair value gaps plus a liquidity sweep, like literally, like this right here can like make you or break you, right? If you're just like a person that you don't want it to be too hard, right? You can find this, if you can go on your charts and find this over and over again, and you can train your mind to see this. This happens on a lot, like on all pairs, at least 1 or 2 times a week, and you can just capitalize on this. Now on the charts, I've been starting on the 15 minutes time frames, right? The 15 minutes time frames is extremely important because, like, to me personally, I can see the whole Asian session, right? The Asian session is usually like a main liquidity point that I use, right? Because if price can clear the Asian session high, right, then we know that price most likely will pull back lower to come and clear the Asian session low. Right here I have my Hindi indicator. It's called Range Box by Nephew Sam. There's the settings for it, right? I talk about this indicator a lot, right? It's one of those indicators that I use, right? But this is just my Asian session. I know liquidity is above and below. We see price went higher, clear this higher high, then price pulled back higher again, clear this high again, then price wicked higher, clear this old swing high, to then violently push down lower to give us this market structure shift. After this shift right here, a slight pullback happened, right? That slight pullback, that first pullback is usually our inducement, right? But we have certain liquidity levels that we use, right? We may have like a consolidation liquidity point, equal highs or equal lows, a sideways liquidity pattern, right? Anything. But in this case right here, after price gave us this first high, like pay attention to this, like this high it didn't mitigate no prior low. Like, we still have this old order block low. Like, it didn't mitigate it. It just went higher and then violently pushed down lower to give us this breakup structure of this swing high, giving us a new dealing range. Always pay attention to your dealing ranges, right? Just like I stated, you could use your OTE when you have your new dealing range from the high to the low right here. Perfect. Just grab it from the high to the low, and this is the settings for it. I have a whole video on this right here. Just go on my video and look for the optimal trade entry. You could put that put the 0.88 also, that's one of them, but this is it right here. But this right here is the golden zone, right? The golden zone that we want to see price pull back into. As you can see, price left this order block, right? It was supposed to hold to continue that bullish leg, right? It was supposed to come back in here to continue that bullish leg, but price breaks it, right? And then build this second high right here. This becomes a relative equal high, right? Even though it's not too straight, it's still a pool of liquidity hiding up here, right? So a beautiful trade, right? If you want to take this right here, it could be right here, from here to about up here, and I'm targeting right down here, right? And if you're on trading view, right, it's about here. You could just add I don't think I could do this on the replay, right? But you could just add right here, just trading, boom, buy and sell. Make sure you're connected to your broker. If you're using any prop firms, right, they're gonna give you a 𝗁𝗂𝗂𝗧 account. That's kind of what I use, right? For my sim accounts, I use the 𝗁𝗂𝗂𝗧 account, or for the for Top Step, right? I have a lot of Top Step X accounts, so I just use that platform too, and just trade on there. So, or if you're a person, you can your own broker, wait, right? Wait for price, right? That's why I have the replay tool. The replay tool is to simulate the live trading action, right? What may happen when price comes inside of your zone. As you can see, when you place your trade right here on the 15 minutes, right? If you're like a day trader, you're not looking to go on the lower time frames. The main thing I'm gonna look to do is to just observe it, right? You're gonna look for price to pull back, right inside of your zone. First tap, second tap, then you want it to rally away, right? So like I stated, I want to see a 15-minute sweep, right? I just don't want it to break through this fair value gap. I don't want it to give me like a firm body candlestick. Let me show you just like a little schematic, so when you're observing it, right? I don't want it to just like purge higher here, because if I get like a firm body breaker structure like this, guess what the next candlestick is gonna give me? Right here, right? I'm gonna bring this back, right? Just a little visual, because if I get like a firm body break right here, this is like a break in retest. Price is gonna break that high, retest this high, and then expand higher, right? Stop loss hit right here. But if I get that 15-minute sweep, as you can see, price respected. I said respected. Price respected this first high, right? Let's go again. This second high respected. And then boom, after we get this break right here, right, we get a break. This right here is where like a lot of traders ask me like, how can I place my where do I get my break even at? Like, how do I place break even? Where's break even? Break even, right here, right? Break even is perfectly right here, right? Once you get that break down here, you can just grab this right here, bring your where your original entry point was at, right? Bring your break even right here, because you know now you're safe, right? It's only because you're safe, because if price comes all the way back up here and take you out, you just know the buys didn't work, because it may have like an incentive to give like a break right here to then expand higher. All right, so you kind of like don't even want to take that risk even. So you walking around like you walking away scot-free from the trade, right? So right, you bring your break even after you get our first breakup structure. Now, as you can see on this pullback, maybe like, what if I miss this entry, right? On that pullback, I'm gonna use the same method, right? As you can see, what did we use? We use this unmitigated order block. What we may use again, this unmitigated order block, right? I'm gonna change this right here to be an order block. As you can see, I made this green right here, perfect. This order block is just the same exact thing. The same thing I used before is the same, I think, same exact thing I'm gonna use again. It's just a zone that price broke through. right? You can just place your entry right here, stop loss at the first candlestick high that we had right here, right? And I'm targeting the same old low. Perfect. Clean, right? So if I miss that first entry and I'm late to the game, right? I'm late to the game. It's not too late, right? Let's just play price and see exactly how this trade ended. Look at this right here. Look at this right here. That's why I say put it right at the high, right? Look at this, because this is a strong high. It's not gonna violate it. It cleared this relative equal high and gave us a breakup structure right here. So even though price pulled back, it came back to merely mitigate this order block. Now, right after we see this, price just came back, mitigate this right here. Let's see if we can get this crazy expansion. I want to see this. Boom. Just like that. Just like that. That's exactly right. That's exactly how you trade this right here. The liquidity sweep plus the fair value gap. It's basically just a fair value gap with liquidity near it, right? But because there's so much confluences that's involved, right? That's what makes this powerful. It's not that like it's so simple, right? If it was like this simple every time, it wouldn't really work, right? It's because there's so much confluences. It's the confluences that makes this powerful, right? Let's go over the confluences. First, we had Asian liquidity sweeps, right? Then we had market structure shifts. Price was once in a uptrend, but now we're looking for price to go in a downtrend. Then we had this fair value gap, which is the magnet of the market. Price always has to pull back to mitigate a fair value gap before we continue. Then we had relative equal highs, right, which is a liquidity point a lot of money is hiding above here, right? Because retail traders are thinking this is a resistance point. So if price will go higher, clear them to then extend lower. Then for the most important one to me, right, that we had for this one was the OTE. Price came right inside of this 0.705 OTE zone to then quickly expand lower to clear this old low right here. And we also had this second entry after this second breakup structure. Price pulled back, mitigate this zone, right? Even though your entry could be right here, right? Price still can pull back all the way up here. That's why you always place your stop loss at old highs. Just like this trade right here. Where was my stop loss? At the candlestick highs. Give yourself room, right? A lot of traders also, it's not that you can't catch the trades, is that you just can't endure drawdown, right? You have to just place the trade, especially when you trust it and you know there's more confluences involved. But you just have to trust the trade and just let it play out. But this is gonna be it right here. I hope you guys got a lot of value out of this video. Make sure you like, subscribe, and comment down below what you think. And if you're a person that want to work one-on-one with my brother 𝗀𝗀𝗀𝗀𝗀, make sure you click the first link in the description and join us in the mentorship where you can live trade with us every single day and see exactly how we execute these models, these concepts live in action, and take the exact same trades with us and learn with the family. But it's gonna be it. Spektrades out.